All right, ladies and gentlemen, hello. My name is Darius Anucauskas, and I'm the Chief Market Analyst here at Markets.com. And today is Friday, ladies and gentlemen. Yes, the 9th of January. Look, we're moments away from from getting the release of the NFP number. So I thought I'm going to do this one live and just cover that one very quickly. So it's about 1 minute left. Let me go through the risk disclaimer very quickly. The content we produce does not constitute investment advice or investment recommendation and should not be considered as such. This material should not be taken as an invitation to acquire any financial instrument or product. Let me just switch into the screen straight away because this is, like I said, this is what's happening. We are, like I said, a few seconds away from releasing the unemployment rate, the U.S. unemployment rate, together with the non-farm payrolls. We are expected a number of 60K, but as I talked about this morning, I'm kind of like I said, I'm kind of hoping to see maybe a lower number, but again, let's see what's going to happen. Certainly anything can happen. But yes, like I said, a few seconds left. I have a few multiple screens here on the screen, multiple charts on the screen. So yes, I have the euro, I have the silver action here, and I have the US dollar. This is a 30-minute chart, so let's see what will happen. So in about, let's say, 5 seconds, we should be getting the figures coming through. And at the moment, let's see what is happening, ladies and gentlemen. So we are seeing a big drop here in the euro dollar. That means the DXY is rallying very quickly. Let's see if this is going to end, where this is going to end up going. But certainly, yes, at the moment, DXY is ramping up. Let's see what's the non-farm payroll, what kind of figure we will get. Let's refresh the page. Because again, judging by the reaction in DXY, maybe we're actually getting a higher number. Let's see, non-farm payrolls 50K. Actually, on the contrary, there we go, lower than the forecast number, and the previous number got adjusted to 56K, ladies and gentlemen. So what's interesting here is that, like I said, the initial reaction we got here was a crazy one. So where the DXY spiked rapidly, initially it seems like it's a good number, but I think that the markets are worried that the lower NFP number here, the lower NFP. By the way, what's the unemployment rate situation? 4.4, better than the forecast and the previous. So, okay, the problem here right now is this one. So I had the number here previously. The previous number was a 64K. It got revised to a lower number. So in a way, not very good for the economy. And if you watched my session this morning on Markets Talk, basically I said that, look, I'm not expecting this one to be a crazy one, and in general, something in between 0 and 100K. I will say that it matters, but not as much, because today we have bigger events like we have the Supreme Court ruling in terms of like were the were the White House administration tariffs last year imposed on the whole world, were they lawful or not, and also we have the meeting between the White House administration and the top 20 U.S. oil company leaders or representatives on the matter of who wants to go into Venezuela and tap into that oil. So yeah, so like I said, these are the main driving forces, and these are the main events that kind of are shaping the markets, could be shaping the markets today. Although yes, NFP is important, but what I said to you this morning is basically that, look, the problem here that I'm seeing. Oh, look at this, Euro USD is pumping really hard to the upside, ladies and gentlemen. Let's see what's going to happen next. But yes, US dollar is declining right now rapidly. We're seeing some equities in some equity indices pushing higher. Okay, look, coming back to the situation with the NFP. Look, in general, what I said this morning was that the problem that I have is that the Bureau of Labor and Statistics still has a little bit of a shade falling on it, and in terms of like quality, in terms of what kind of data they're delivering, and the quality of that data. And yeah, it's a big issue for them. It's a big issue, like a reputational issue, because again they had to kind of go into shutdown when this kind of skewed the whole market, the whole idea, the whole data. There was the data collection, the data quality, and now, like I said, they're slowly trying to rebuild their image. And yes, we got the figure. It was 50K right now. Yes, the previous got revised to 56K. Look, I was like I said, I was this morning. I was saying I'm hoping to see maybe a little bit of a lower number, because I really don't believe that everything is suddenly very well, very good. But the reaction, in my opinion, the reaction why we're getting the U.S. dollar has drifted strongly to the downside. Yes, the fact that we missed the forecast, that's one thing. And the other thing is that maybe the Federal Reserve is now more likely to go and cut rates, because this morning we just had like the percentage at 49. Now it is increased to keeping the rate the same, but I think that it will change. I think that the market does understand it might change, because again, the Fed will try to support the economy by cutting rates, because the problem with the jobs is still there. However, also what I've mentioned in the webinars, that I really doubt that the funds, if the corporations get cheaper borrowing, that this will be able to kind of boost job creation. No, on the contrary, I think everything will get poured into AI, and we know that that's the whole point, to kind of remove the jobs, and optimize the business process, right? Basically, cutting jobs, basically cutting costs, and increasing more money or increasing capital expenditure, into the whole AI thing. Look, long story short, for now, we're watching this very carefully. I think that equities are actually recovering. Equities, I'm seeing that they're pushing strongly to the upside right now. Well, I can't blame them, because again, this looks like more of a potential idea for, for, like I said, for the Fed to go and cut further. So this is maybe what the market participants are considering. If that's the case, then yes, this is beneficial for the equity world. However, let's see what's going to happen. For now, I'm not in a rush to do anything here. I'm observing. Of course, the stock market is at all-time highs, and it's Nasdaq that's lagging a little bit. So we can see that Dow and S&P are kind of, both of them already hit the all-time highs. It's Nasdaq that's lagging right now, but certainly it will be an interesting moment to watch. Ladies and gentlemen, look, I'm not going to say anything else, but I just wanted to kind of cover the NFPs with you together in this video. For now, like I said, I'm expected to see maybe DXY correcting a little bit more to the downside today. Today, basically looking at the, let me just jump into the Dow Jones Industrial Average. The market is still closed. It's going to open up in an hour's time. In general, Dow Jones Industrial Average seems to be aiming for that psychological 50,000 mark. It just needs to overcome the current all-time high. It just needs to do that, right? Currently, the price is at around 49,400, so we are already above this one. We already are creating, actually no, they're not at an all-time high yet, because on the cash index we had reached an area around the 49,600. On the kind of during market hours, during open hours, we have reached the area around the 49,338. So okay, we're clearing, like I said, we're clearing this level for sure, if you can see it on this chart. So I think that, like I said, the probability, the idea for going for the 50,000 zone, I think is becoming a little bit more realistic. Let's see if that's going to be the case. For now, we're not really, like I said, we're not really over speculating. We're seeing euro dollar here pushing strongly to the upside. Yep, DXY has declined, but maybe look, I mean, let me just jump into the daily chart. Okay, maybe there could be a little bit of a retracement back down on DXY, given the fact that it had a good run already, a little bit of retracement, but certainly we're not in a rush to do anything yet. Let's see how the market opens up and what kind of reaction we'll get then. For now, we're observing this one very carefully, so keep your eyes on the charts, and of course also if you're if you're still in the markets until until kind of later on, keep your eyes on the Michigan consumer expectation, the preliminary number. So that's going to be quite interesting, and of course let's see what kind of outcome we'll get from the Supreme Court ruling, and also the whole meeting in the White House with all these oil giants. Ladies and gentlemen, I hope you found it useful. I just tried to do a quick little coverage here. Thank you very much for watching, listening. I really appreciate your time. As always, stay safe, have your stop losses in place, risk only what you can afford to lose, don't overtrade, and everything will be fine. I'll see you later. Bye-bye.